Wage increases are slowing way down. And if you look at real wages in terms of inflation adjusted, workers across this country are actually getting poorer. And if there was any concern about wage price inflation, there should no longer be. If I were the Fed chair, and obviously I'm not, and I'm glad I'm not, I would not be concerned about raising interest rates after today's showing and job report.
But what about this idea here that you still have inflation that is running quite hot, and this idea here that wages are starting to roll over a little bit here? Is there a worried about the standard of living problem in the United States?
Well, I think obviously we have 60% of Americans living payroll paycheck to paycheck. We ought to be concerned. You know, most people have not had a real wage increase in 35 years. So obviously there is and should be a concern about consumers having enough purchasing power to keep on buying all of the things that this economy can produce. But that's very different from what Jerome Powell and his colleagues at the Federal Open Market Committee are worried about. They are worried about, and he says it over and over, too tight a labor market, wage price inflation. Well,
Right.
stop it. There just isn't.
So is what you're saying, Robert, essentially that the dual mandate is not going to come into conflict?
I don't think there is any conflict. I think we are seeing inflation slowly recede. We are seeing the makings of a soft landing. We don't need the Fed to raise interest rates again and toy with and risk a major recession. And it's just unfair. It's unnecessary.